I just wanted to make an update video in regards to the cycle and where we're sitting, in particular surrounding all of this extra news that continues to come out. Now, I don't want to get into the politics of it, and if you don't know what I'm talking about, it's the Blackout Tuesday that's going on. It looks like it's just another event that has taken the spotlight after COVID, after the Australian bushfires, after whatever else was before that. And that's not to downplay deaths. So that's the difficulty in talking about this, is that sometimes people get really emotionally charged, but here on the channel and in our community, we're trying to make the most out of our money and our time here so that we can live a great, prosperous, financial free life, and then in turn give that energy and that positivity to other people. And so it's trying to remove the emotion from the financial decision that we have to make. What I mean is, with these types of events that happen, people can often lose sight of what's actually going on in the bigger cycle. And if you're familiar with the channel, I see us in an 18-year property cycle, which affects the stock market and affects our investing as to where we believe we are overall, whether we're in a bear market or a bull market. Is it a good time to invest? Is it not? So essentially with this video, I just want to go over the recent events of the Blackout Tuesday and any of the other events that occur. And you can kind of see that these narratives continue to play over and they almost cycle on repeat. And then that really affects people's decisions in what they invest in. So within that intro, I really want to make it as clear as possible. I'm not here to get into the politics of who's right and who's wrong, which side of the political spectrum should we be supporting in an event like this, the Blackout Tuesday thing that's going on. I just want to try and clarify things. I guess I want to remove the noise and just do a bit more of an ad hoc video and give us all an update as to where we are in the overall cycle, and is now a better time than ever to invest, or is it not? Should we be waiting? So with that said, I just want to go through a few of the charts and I want to check out where we are, because there's so many different videos about, is the market going to crash again, or has it fully recovered? What do we do? Where are we sitting? What happens next? Have we set out ourselves a plan that we can continue to follow no matter what type of emotional event comes up in the media? This is probably one of the most important pieces of our whole trading plan. It's our trading psychology, and do we make a decision based on geometry, the charts, technical analysis, numbers, mathematics, or do we make decisions based on emotion and what the latest headlines are? Now I'm going to go through the US indice market, so the Dow Jones, the Nasdaq, S&P 500, quickly look at the Aussie market, and then get into some of the other markets that people would generally consider safe havens or hedges towards these markets, like your gold, silver, and one could argue Bitcoin and some of the cryptocurrencies, but we're just going to have a look at those as well. So looking at the first one here that I've got on my screen, and it is the Dow Jones. Now all I'm doing on all of these markets is just overlaying a fib and seeing how far we have come back from the bottom. So we've got the top, the bottom, and then see how far we have bounced. Essentially, we want to see this bounce through the 61%, or as I've got here on my chart, the 38. That percentage in history has shown that that is a good level of recovery for a market. Now it can fall from here, but if we can make back 61% from the high, so high to bottom, and then we make up 61%, that generally shows us that we do have a lot of strength in the market, and this isn't just some sort of dead cat bounce and we're going to break the lows. With that said, looking at Dow Jones, we have broken and closed through the 61%. So we are currently sitting at around 25,700 points on the Dow Jones. Next chart we're going to look at is the S&P 500. And with the S&P 500 as well, it's broken clearly through its 61.8% level of the high and the low. Again, that is a very bullish sign. Now, like I said, this could fall from here, and it would be lovely to see at least some sort of accumulation again before we take off. Maybe we're here for another 6 to 12 months as the markets figure themselves out. We just don't know. But overall, this looks like it is reasonably strong in comparison. The lows that we saw on most of the markets on the 23rd of March 2020 looks like they could be the lows. Now, I'm not going to call that definitely, but they do have a very strong reason for those being the lows, especially with how far we've bounced back, how much volume happened on those days, meaning a lot of people selling and a lot of people buying, and the fact that we haven't come back to test that just yet. The Nasdaq is a story of its own. Nasdaq has nearly recovered 100% of its fall. Can you believe that? I'm gobsmacked. Obviously, we know that a lot of the tech companies have been doing quite well during this period, especially the likes of Amazon and other guys who are delivering parcels, and everything has just moved online. So it's not surprising when you think of it like that, but this market has almost recovered 100%. Looks like technically it could be a double top. It's not confirmed that it's a V-shaped recovery. Obviously, that's the V look there. But overall, that is looking reasonably strong. If we see it fall from here and crash to those lows, maybe, but overall, that is pretty good looking at this point. Now, the Aussie market looks the weakest out of all of those markets there compared to the US. So we've had the 3 US markets and now the Aussie. The Aussie has barely broken its 50%, but that's not surprising as we don't have industries like the US in the tech sector. I'd probably see the Aussie market as having a higher probability of returning to its low, testing its low, maybe breaking its low, compared to the US markets, which are much stronger than the Aussie. So I take that in consideration as well when I'm looking to invest in stocks. The Aussie market looks reasonably weaker in comparison, and I'd rather invest in markets that are looking stronger for the longer term. Now let's have a look at the traditional safe havens being gold and silver, and we can see on gold that we've come up close to a previous high that was set back in 2012. Now when these get close to these highs, they generally have a sell-off. This is where a lot of people bought many years ago. That's nearly 8 or just over 8 years ago now, and people have been possibly holding this whole time, and that's what happens when we get to old tops. They just like to sell out, get their money back and get out of the market. That leads us to new fresh money coming in, and people are willing to hold it past these previous highs. So gold is looking like it's setting up again for another move north. It could have a fallback here to 15 or 1600 just to play out a little bit more time as these markets move on. Maybe we come back and test these old highs that have all been set at around 1360, 1400. That wouldn't be such a bad level either for gold to just slowly make its way back down over the coming years, as I see the indice markets, the stock markets, taking the lead again from here. But that's not to say that's the end of gold. Gold is just having its time in the spotlight. Maybe it continues, maybe it doesn't. Either way, it still looks strong longer term. I'm talking 5-10 years from now. Silver, on the other hand, is looking much weaker than gold, but it looks like it has the better potential than gold to make a bigger run up. We can see that silver's had a V-shaped recovery from its top back in February, looking reasonably good long term as well as gold. And we take a quick look at the gold-silver ratio, which essentially means how much silver you can buy for 1 ounce of gold. And this shows that silver is on a strong tear against gold. So silver would be a better bet for bigger gains longer term. Lastly, let's have a look at Bitcoin, and Bitcoin has just recently given us the V-shaped recovery that we were looking for. It could fall from here. You know, we just saw a nice quick snapback overnight. This is on the 2nd of June. So look, from here, maybe we see levels being retested down at around 7,300, 7,400. Maybe it's just a brief period back to 8,200. Who knows? Either way, I think we all believe that Bitcoin has a lot further to go from this point of 9,500. The upside potential looks far greater than the minor risk to the downside. Ethereum had its snapback overnight, and it looks like it's still continuing in its uptrend. We've basically recovered the full ground from our highs in March. Just looks like a good bull trend. If we get a pullback from here, that'd be great for a little more accumulation, but apart from that, Ethereum's looking really good, just like some of the other cryptos. But I'll leave it there for now with the cryptocurrency and the review of the markets. Let's have a look at the cycle and where we sit within the property cycle, which basically covers the overall market. So here we have it, the 18-year property cycle. If you're new to the channel, this is something that I hold dearly, and this is basically the roadmap to all of our investing. And right now we are comfortably sitting around the mid-cycle dip. That's right, we have had the uptrend. We are now going through that middle part of the cycle just to give ourselves a little bit of time, a little bit of a refresh. We have to have pullbacks in markets. It's super healthy for it. And from here, we're looking for an explosive stage to begin in the next year or two. I'm not saying it's going to happen right from here with all of those pretty decent recoveries in the stock market, but overall it's looking like a pretty good trend to continue for the next 6 or so years. If you want to know more about the cycle, I've got several videos on the channel. I'll leave a link to them up here, so you can check those out to learn more about the property cycle and how that all ties in to the stock market and our investing. It's a brilliant way to invest stress-free. You're not having to look at all of the noise happening daily, just like we've seen today with the Blackout Tuesday and all of the other events that occur previous to this and that are going to occur down the track. This is the roadmap. It has worked for the last 200 and something odd years, and there's plenty of science behind it. That is for the previous videos, which I've left a link to up here. Go and check those out. Let me know if you have any questions about this. This is something that isn't taught in universities. It's rarely online, so really make the most of it. Have a look at it, prove it to yourself, and see if it's something that is worthwhile bringing into your arsenal of investing. For me, it has been a lifesaver. It reduces stress. You definitely know where you're sitting, and you can comfortably make decisions in that account. And that's what I want for everyone that's investing. Like, I don't want people to go up in arms about the next news article that's come out and think that the world's going to end. Just wait for it. It's happening. It's happening. It's all jargon. It's noise. That's my video for today, guys. Normally I'd throw a little bit more jokes and funny stuff in there, but I thought today is probably an important one to cover, especially seeing as I had this high news piece, emotional time in the market. Just give us a recap. Let us try and settle ourselves a little bit if we're finding it difficult to make decisions and how to set up our plan. If you want to learn more about investing and how to set yourself up, hit me on the link down below, schedule yourself a free call, and we can get in touch and see if we can work together on setting up your own financial freedom investment plan. If you found this useful, be sure to hit the like button down below, hit the subscribe and the bell notification icon. You know, it helps out the channel and helps push the information to more people out there for free. And until then, remember to have more fun and get more done.